volume on these trades, and there's a very, very simple reason. Because there's so much value in it, it should be seen by other people. It literally should be seen by other people, right? So the other thing about this is that most of the time when we see these, most of the time, the trade also has a stop, because there's usually a takeout of a previous level that gives us the banker element of the trade. So, you know, it's not always going to be the case, because you can see, for example, there's a banker sell here on oil just now, just there on that previous candle, just in the last 60 seconds. The volume's actually very low, but that's because it didn't take out any key levels. Does that mean that this is not a good sell trade? Well, possibly, because it never took out any key levels. I like to see that level being rejected. We always want to see something being rejected before we start buying or selling into anything. And it's actually part of our plan when we start reading, isn't it? It's part of our kind of agreement with the markets that something has to be rejected before we want to be interested in it. So when we see something being rejected, it also normally means that there's a stop run. Because it also means there's normally a stop run, it also means there's normally going to be big volume attached to that trade. But on top of that, the big algorithms should know that that trade is in place. The big algorithms should know that there's a bit of business trading in those areas, allowing us to make the big decisions. And that's exactly what we try and get into. You know, when we see a trade here, for example, it doesn't give us any spikes in volume at all. But it would have given us a big spike in volume had we been able to run the stops at the top edge. That just never happened. So the decision is, do we take it because if it doesn't have volume? Well, yes. Is it as good? Probably not. Because we haven't managed to get the price and the liquidity that we'd hoped to get. But obviously, it's one of those things that we've got to just look at, think about, you know, and try and figure our way around a wee bit. There's actually been not a lot of trades recently. The last trade, as I said, was just this. You know, you could literally scalp every single candle on this by trading these. And you could actually take it from a 1 minute chart all the way down to 30 seconds to get as much practice on the right-hand edge as possible. You know, and you can actually start looking into these areas to try and find out what you're going to be doing. Now, there is the black line that's on this, by the way, is the, just make sure it is before I say. Yeah, the black line is the euro dollar, of course, so that we add in something that's not related to the oil complex, just to give us something else to work with. You could use, obviously, bonds, if that made sense. So you can see that when this red line appeared here, there was a very, very good excuse to be dealing at that stage. As I said, there just wasn't the liquidity, but it certainly would have been a good reason to deal, to take a bit of business at that stage, in line with the fact that the euro dollar was falling. So that would have been a sell trade in oil, and you can see that that little sell trade in oil works out an absolute treat. It goes from a price of 60s to a low price of 20s.